Hey, leaders of tomorrow, back at you with another video. And in this video, we're going to talk about how to file S-corp taxes with multi-members, right? So then now, if you own a S-corp, right, and you have multiple members, there's a little bit more nuance in it than to say if you're filing for with an LLC or a sole proprietor. There's more into it, and you know, the S corp is pretty much the first corporation that's separate, that has like a complete separation in terms of tax return for the corporation and tax return for the members or the individual or the tax preparers. Now in the other corporations like LLC, sole proprietor, LLC, you know, the business income and expenses is reported strictly directly on the Schedule C, whereas in the S corp, the S corp has to have its own tax return filed, which is the 1120S, and we're going to get into it. But I just wanted to give this example so we can have more of a breakdown. Okay, so let's just say we have 4 members, and the corporation is called Building Blocks Inc. The members are Sarah, Josh, Mary, and Lisa. Okay, each member owns 25% of the S corp. Okay, so each member owns 25% of the S corp. So they're all equal partners. Okay, so let's just say hypothetically, we want to file the taxes. When we file the taxes, right, the S corp, you have to file the S corp taxes on a form called the 1120. That is a reporting filing. So a reported filing means that there's no taxes or anything that's actually taken out of this tax return. You're just telling the IRS that this S corp made this amount of money and lost this amount of money for the year. That's what the 1120 is for. Okay. Now, in the situation with the 1120, right? Let's say the corporation made an income of 200,000, but the expenses was 300,000. Okay, let's just say that. Okay, and let's just so the corporation lost $100,000 overall. Okay, now let's say $100,000 of that $300,000 expenses was paid in wages to the members. So now with an S corp, you can pay wages to the members as well as the members being a shareholder. So you have a double action here. The wages being the incomes being paid as wages to the shareholders, and the shareholders making a percentage of the company's profits, right? So that's like a great double action when it comes to an S corp. You know, it's not as easily done with an LLC as with an S corp, but you can still do it with an LLC. But the S corp is better structured for paying the members as actually employees and then taking a profit as well out of the corporation, which is like an owner's draw. It's considered the owner's draw. So in this situation, you have that you're going to report on the 1120 that the corporation made $200,000 but had $100,000 in expense, and $300,000 in expense, and $100,000 of that expense went to paying the shareholders, right? So each of the shareholders now, they get what is called a 1099K from the S corp, right? So that 1090K is given to each member, right? And that 1090K, you take that to your tax preparer, and then now he files a 1040 for each of the members. Okay, a 1040 tax return for each of the members. The members also get a W-2, right? From the S corp, they also get a W-2. So from the S corp, because remember, the members are employees as well as shareholders of the corporation. So the members will get a W-2 from Block Inc. and they'll get a 1099K from Block Inc. And then you will take these two documents to your tax preparer, and then he will file to where, okay, Sarah, Josh, Mary, and Lisa, they have a $25,000 wage, okay? And from that $25,000 wage that they paid $3,000 in federal tax because they're in the 12% tax bracket, right? So they paid $3,000 in federal taxes, right? But here's the caveat: because they own 25% of the S-corp, and the S-corp is a pass-through entity, pass-through entity, and the corporation lost $100,000. The corporation lost $100,000, and they own 25% each. They could split this $100,000 four ways, and each of them will get 25,000. So you see, so because they made 25,000, and they each can claim a $25,000 loss from the S corp. Now their taxable income goes to zero. Everybody goes to zero, and the $3,000 that they paid in taxes, they will get all of that back in a tax refund, because their taxable income is zero, and that means if their taxable income goes to zero, that means that they should have been taxed zero. They shouldn't have paid any taxes, but they paid $3,000 during the year. So the federal government will send each member back $3,000. Okay, and that's how S corporations work. The S corporation itself files an 1120S tax form, but then the corporation will give each member a 1099K to report incomes or losses of the business, and it will also give them a W-2 because these same members are employees of the business. Okay. Anyway, guys, this is the structure for an S corp. If you have any questions, my name is Ashley Celestine. I am the founder of AC Tax Help. I help individuals file their tax returns. If you need any help or need any advice, just hit me in TikTok, in the bio, in YouTube, in the description below. You could click that. This is the structure, guys, and I hope to help. More information on the way. See you guys later.